Today, we are with my colleague Sami Sebay. We are going to talk about trading mindset. Sami is a forex trader, and he will share with us his experience and his point of view about what is the right mindset to be a good trader. So, welcome, Sami.
Thank you for introducing me, Sajid. It's true that it must have started years ago when I was a student. I heard about mindset through the sentence that you must know, like champion's mind, winning characters, and other. Then I have often been asked the question for trading. What is the mindset you need to adopt to be a good trader? Besides, I have noticed that the term of mindset is very rich. It means many things and that not everyone has the same definition. Without presuming to have the definition, I think it's important to define the term mindset before associating to the world of trading. First of all, mindset is an English term that translates as state of mind. So it refers to the mentality of a person, an individual. Personally, Sajid, I agree that the mind is simply the management of uncertainty through emotion, reaction, and other. Uncertainty is a powerful term that will include many underlying factors such as event, sensation, fears, and other. So, why I speak here of uncertainty management? Because what is certain, what is known, will mainly use our experiences, and therefore we will react in a certain way according to our experience. Regarding trading, there is a concept called momentum bias, which means that when the market rises, we tend to buy, and conversely, when it falls, we will be pushed to sell. So, the concern with the momentum bias is that very often, when we go to buy because the market is going up, suddenly the market will start to move up and down. And conversely, when the market is falling, you will tend to cut your position, and once again, you will see that the market will then begin to recover. Finally, very often I buy and cut my position at the wrong time or even at the worst time. I think that many will recognize themselves, and that is normal. This phenomenon is driven by what is called crowd psychology. So, crowd psychology, in other words, and it's not pejorative, it's sheep-like behavior.
Okay, I see your point. And I can understand, for instance, if we relate to what happened with Tesla these last days. Tesla raised from 1,000 USD to 2,000, and a lot of people bought between like 1,500 and 1,700, and essentially that was the worst time to buy. Even if they made some little profit in the next day, few days after, the price dropped to 1,400.
Yeah.
I can understand, and that's very tempting many, because when you see a share's price which is going high, you tend to think, okay, oh, I don't want to miss this opportunity. This share is skyrocketing, and I want to take profit from it. But okay, but can you just go further about what do you think about sheep-like behavior? Because as I explained just before with this example, when the market goes up, that's very attractive to buy a position. And when you see that you start losing a lot of money with your shares, that's very tempting as well to sell your position in order to stop your losses. Can you go a little bit further about the sheep-like behavior
Yes,
or
of
the
course,
crowd
Sajid.
psychology?
Yeah, of course, I completely agree with you. However, Sajid, what you have to see through the evolution of the price is actually the graphical representation of the sum of the emotion generated by the trader, rather than the value of the stock itself. The price can suffer a moment of euphoria and conversely a moment of panic from the traders, totally disproportionate. And moreover, Keynes says, and I quote, there is nothing more irrational than to invest rationally on the market. So, to explain this sentence, I use the momentum bias. Thus, when the market rises, we tend to buy, and conversely, when it falls, it may make sense to sell. So, I will give you an example of a very famous experiment, the Smith, Suchanek, and Williams experiment. So, in this experiment, several individuals are placed in a real market condition and are clearly shown the fundamental value of the asset and the stock price. So, this asset is valued at $100 and the stock market value is also $100. So, normally, according to rational individuals, the stock price would have had to be on the spot. As you can imagine, we first see a rise in the price until reaching a stock price at $200. So we can even call this phenomenon a speculative bubble. Then we see a sharp drop in the stock market value.
Yeah. I can relate to your point, but finally, it's true that we realize that this kind of phenomenon is often present in stock market values and therefore corresponds to different feelings of the capital providers and therefore to the psychology of the crowds, as explained just before.
Yes.
Moreover, it reminds me of Derman's book, My Life as a Quant. And this famous quotes, economists have understood nothing about the market. They're making mistakes when they try to mathematize human phenomena at all costs, or to quantify all the different phenomena at all costs, which means
Exactly.
Which means that when you try, what's explaining by this sentence is the economists are wrong because they're trying to put equation behind a human behavior phenomenon.
Mm-hmm. Exactly, you have summarized this point very well, Sajid.
But then, what advice could you give us to have a good mindset when we trade, if we can't mathematize all these effects?
Okay, the first advice will be, first of all, to combine the psychological dimension with technical indicators. As we discussed just before, each trader receives more or less the same information. He is faced with the same stock price and the same indicators as yours. So you need to practice in order to observe market reaction, put your strategy into practice, and understand how to interpret the indicator. I think you should have an optimization objective. So work with a small number of indicators and tend to be more efficient when using them. It is rather counterproductive to regularly change indicators, hoping to find the one that will do miracles, for example. So the goal is to try several strategies, to make a point after each trade or new sensation, the way that you have interpreted information in order to select a strategy and stick to it. This point is very important because when you are going to trade with your own fund, you have to have discipline concerning your strategy.
It's interesting because I can definitely relate to what you have just said right now. I remember not so far ago, I was trading very well. I was following the algorithm at the point, and after 1 week and a half, I start just buying stock based on my intuition. I can't explain it why, but we have a tendency to always stock. Mainly when you see that sometimes your algorithm is making some loss, you have this tendency to be overprotective.
Yeah.
But when we have this tendency to not always follow strategy and even in some cases to get into position without having a specific strategy, can you tell us more about it?
In practice, many people find it difficult to keep their temper and let themselves be overwhelmed by their emotion. So I give you the case, for example, of a person who will multiply his buying operation to make a bigger profit or compensate for a loss, for a previous loss. So very often, when you lose your temper, you will make mistakes and then lose money. This is why I want to discuss in more details the strategy, which must be made absolutely clear. When you take a position, it is mandatory to know when you will exit the position in the event of profit or loss. It is therefore necessary to have a numerical objective of the expected returns on your investment as a maximum risk rate, for example, 3% or other.
Okay, in other words, you are talking about choosing a take profit and stop loss strategy.
Yeah, absolutely. Absolutely. Concerning the stop loss, you have to accept the idea that you can lose trade and even that you are going to lose trade. It's mathematical. Even professional traders lose between 40 and 60% of their trades. But the difference is that they lose little thanks to stop loss and have a big profit. So on the other hand, your stop loss has to be significant enough to absorb market fluctuation.
Okay, just a last question, Sami. Nowadays, due to the COVID-19 crisis, we have a lot of news given by influential people. For instance, Donald Trump is tweeting that and that, or when Warren Buffett is saying that, okay, like the market gonna go up, or any type of prediction, we can see that it can more or less impact the market. What do you think about the treatment of these informations?
Yeah, you already know my opinion about this. For me, like many traders, we don't trade information, but reaction. Instead, we ask ourselves the question of how traders will interpret the information and what their reaction will be. So one thing that is important to note is that in recent weeks, we have had some very encouraging information about the market, such as the release of more billion by the Fed, ECB to support the economy, for example. But when we have news that may seem very positive, but the market does not
Just
react.
I mean quickly, the ECB, when you're talking about the ECB, you're talking about the European Central Bank, just to be precise.
Yeah, exactly. And when we have news that may seem very positive, but the market does not react, it means that we have to be particularly careful because the underlying trend is surely very bearish. Last advice, be patient. Don't be frustrated to miss opportunities because you will always have others. And don't forget that the market will still be open tomorrow.
Okay, thank you very much, Sami, for this complete explanation on the mindset to adopt to be a good trader. And by the way, just for people who are listening to us right now, do you have any bibliography to advise us to read further and to know further about how to have the good mindset?
Yes, of course. Yes, of course. I would advise to read Mindset by Carol Dweck. It's not really related to trading, but it is very interesting from a personal development point of view. So I will advise you to read this one, Mindset by Carol Dweck.
Okay, thank you very much, Sami. It was a pleasure to talk with you.
Thank you to you, Sayed.
Yeah, bye.
Thank you. Have a good day, everyone.